Hello, everyone. I hope you are doing great. As you can see, we have the chart of Triple Q, SPY, Apple, Microsoft, Tesla, Amazon, Meta, and Alphabet in front of us. And we are going to do some analysis on these charts and see what are the most important things and what are the most important changes in the market in the past 2 weeks. So let's go and review the charts and see what can we can do with this chart. Okay, if you are looking at this chart, in the past 2 weeks, we have experienced one of the sharpest move in uh, in the market post FOMC. If you are looking uh, at July 27th, we experienced more than 4% in both Triple Q and SPY, and there is very important thing that we experienced yesterday. Yesterday in SPY, we had the lowest volume in 2022. And for Triple Q, it was the second lowest volume. These two ETFs or funds, they are the most traded asset in the market in most of the days, like more than 95% of the days. They are the most traded asset in the market if you are looking at the volume price. So what is important here is that if the price going up, but the volume decreasing every day, it cannot be show of a bullish market or a strength. Yes, in the past months, we see the market moved a lot, but as you can see, the volume decreased in both cases. So as we see here, when we go up, the volume decreased. This is not a, a strong bullish move. So there is a very good chance that we see some reversal. Other than these two, now we can look at the most important tickers, the biggest tech companies, and also the most traded assets. The most traded asset is Tesla. If you are looking at Tesla, after the FOMC, we see an increase from around 800, 700, actually 770 to 940. And you see the volume decrease like every single day in the past 5 days. If you are looking at Apple, which is the second, if you are looking at Apple, which is the second most traded asset and the biggest company, you see the same thing. So the price goes up, but the volume decreases. This is exactly the same for Microsoft and other stocks. If you are looking, most of these assets experienced their lowest volume yesterday, their lowest volume, and they made it doji. Doji usually is a sign of indecision in the market, which means people don't know if the prices continue to go up or down. Whenever we have a doji after a sharp move and the volume, if the volume increase, it is like more reliable. But as you can see, today we see all these charts make another important thing, which is pivot. The pivot point, you can see clearly in Tesla, in SPY, Triple Q, in Meta, in Alphabet and in Microsoft. Also, we can see it in Amazon and Apple. The pivot sign after a sharp move also is important. So I am convinced that this market has no enough energy to go higher because in the past 2 weeks, as you can see in all of these charts, the price went up, but the volume went down. So this is not a sustainable bullish move. And as you know, it could be very, very much like the move we experienced in April. So if you are looking at here between March and April, we experienced a sharp move followed by a sharper bearish move with increased volume. If you see this, this is the very much the same as what we experienced here. Triple Q was up around 17% in the previous move. If you are looking at this zone, you see the down volume. It was going up, but the volume decreasing in this part as well. And it followed by a sharper down move with increasing volume. So this could be considered something similar to this, although it happened in longer duration, but the percentage of this move is almost equal to this one, and this one is also equal to this one. And they both have same characteristic. They both went up on decreasing volume. When you are in bullish market, it usually the volume supports the bullish move, price goes up, and volume also goes up. But what we can see is that the average volume of trading decreased like by 60% in both of these tickers, which are like the most traded asset, which is very important. But other than these technical issues, we have some fundamentals that we need to look at. The CPI and core CPI and the inflation rate will be out. The data will be out on August 10th next week. If you are looking at the CPI, core CPI, and the US inflation rate, you can see in the previous months, it means June, the data shows acceleration, not deceleration, nor pivoting, nor top. So many people predict that this is like the last high reading, but we do not have any evidence on the chart that indicates this inflation is tamed and picked or any other things close to that. So this is really very important because there is a great chance we see even higher numbers for July. And many people may say, okay, Fed doesn't look at this because Fed prefer to look at PC or the price index as a measure of inflation, and they target for PC is around 2%. But if you are looking at the chart of PCE or PCE index, you cannot see any deceleration nor pick in this as well. So there is no pick. You need at least one lower reading. And I want to tell you this. As the Chair Powell said, they are not relying on 1 month's data. So if you see, we had the same problem here. Last November, we had one lower reading, then it goes up again. If you are looking, we had 2 here, and then it goes up. So as I mentioned before, we do not see anything indicating top we have no evidence. Those who try to speculate that cannot provide any data-backed chart or numbers that indicates we are at the highest in the inflation, and the inflation is peaked. So Fed is going to slow down, and they are going to pivot in the next FOMC meeting, which is on September 21st and 2nd. So in the next 6 weeks or 7 weeks that we are going to have the next FOMC, we are going to have two inflation data out for July and August. I'm pretty much sure we are going to experience higher number, not lower numbers. The consensus at this point is we are going to see 8.7 for July, which I think is very unlikely, and because the chart and the data shows some acceleration, not deceleration. So based on this, if we see higher numbers on August 10th, the market will panic, because in the previous FOMC meeting, Fed Chair Jerome Powell said, we are considering even higher numbers if it is needed to tame the inflation. So most people just focus on that 75 point, but they didn't listen to the whole context. I believe there is a great chance we see higher numbers, at least for July. We should wait for the August. As I am talking to you right now, Saudi Arabia increased the oil price for exporting to US on September and afterward. So this is another thing that could increase the energy and food price as well. If you are looking at these data, you can see the inflation has peaked or near peak. And the other thing that I would like to talk about is the Bank of England. The situation in Bank of England and the inflation in England could be a good leading indicator for US as well, because it looks like they are dealing with their data much better. They expected the inflation to rise to 13.3 by October. I'm repeating that. So the Bank of England mentioned they are expecting the inflation rise to 13.3 by October. It is highly likely that we experience the very same situation here in US with some delay, but I'm pretty much sure the situation in US could be very close to what we are experiencing in England. So if we are going to experience a double-digit, I'm repeating that, double-digit inflation rate in the next 2 months, I will not be shocked. And since the job market printing good numbers, it will give a free pass to Fed to increase the rate as much as they want in the next FOMC. There could be 3 possible scenarios for the next FOMC meeting: 50, 75, or 100 points rate hike. I would like to bet on 100 points. I know it's very unlikely now, but because the consensus is based on the see peak in inflation. I cannot see any peak on any chart. So I believe there is a very good chance that we see a much higher number for inflation, and I will trade based on that. Don't forget that technical analysis is very important. It has its own rule to find like the best entry or exit in any trade, but there is something that we cannot forget, and that is the context. When the context is changed from quantitative easing to quantitative tightening, you cannot trade with the same rules. And more importantly, the prices will not repeat their peaks in the quantitative easing era during the quantitative tightening era. So that is what is very important, because if you are looking at the most books, website, and anything that teaching technical analysis, they will tell you prices will be repeated after a while. This is true, but if the context remain the same, most people forget that quantitative easing era is finished. We are trading in quantitative tightening era, which is not good for a stock market because the cost of borrowing increase. And if you are looking at the money hedge funds and other people borrowed to buy a stock, it decreased more than 250 billion in the past 6 months. So, and this trend, I think, will continue. I think although we had a bullish move in the past months, but it is not a sustainable move, because as the price went up, the volume decreased significantly. Thank you for listening to me. I will try to post this on YouTube. You can also join the YouTube channel to review the previous analysis. Thank you so much.